Welcome back to Indianomics. I've been discussing with Shanti Ekambaram of Kotak Bank, Rajesh, the CEO of CIBIL, and Kartik Shrinivasan of ICRA, whether we should start worrying about unsecured loans or any deterioration in retail loan category. The question is rising because Reserve Bank has written to banks and NBFCs. Okay, Shanti, you proved with chapter and verse that a much larger amount of data footprint, digital footprint is available, which is why loans, even retail, even very small loans, are built on good data. But, you know, people change when circumstances change. I mean, you probably have data of a person paying his phone bills on time and electricity bills on time. I don't know what kind of data footprint you have. But if there is a problem in terms of job losses, startups shutting down, etc., then all these will weaken together. So how secure are you about this much lauded data footprint?
So two things, Lata, right? This is very closely linked to the macro environment. You know, if you see, the macro environment has been extremely stable for the last 12 to 15 months. And this year also looks stable. Yeah, while you have seen some of the new age companies, melt, I don't think they were sort of really borrowing a lot, at least the individuals there. But I think you have to watch the macro factors very closely. Remember, these are unsecured loans. When macro goes bad, right, unsecured loans start seeing a little bit of a worry. What is also different, which I have not stated earlier, is you have to look at the risk-adjusted return of any segment. Probably one of the reasons why the growth has been sharp is the risk-adjusted return in this segment in the last 18 months has been extremely good, which means the risk has been well managed and the returns are very good, and which is why people have been this thing. So I would watch and monitor macro and external forces very closely. This is apart from monitoring your portfolio. One would also keep monitoring transaction data to see, are you seeing external delinquencies? Are you seeing trends which change? Any unsecured business depends on the macro, depends on the micro, and needs close monitoring. So I am always watching closely all the time.
Okay. No, I just worry that the way Germany went into recession just yesterday, and people are very seriously talking about a possibility in the US. If destination countries for our exports are facing trouble, it's quite possible that SMEs who cater to these could be having a problem. But I'll come to that macro in just a minute. Rajesh, I just want to know, you are making these PowerPoint presentations every quarter. Now, would you worry with the small changes that you have seen from the long experience you have?
Lata, I think these are very early trends. So if you look at the kind of, again, like we discussed earlier, there's just so much data and analytics and all sorts of algorithms at work. So I'd like to point out 3-4 things when we talk about whether we should be worried about retail loans or specifically unsecured, etc. I think it's important not to throw the baby out with the bathwater. We are on a nice growth path. So to zero in on the real issue, right now, we've done a study to study leverage and see where exactly this is happening. There are 3-4 simple things that emerge within these loans within less than 50,000. So for example, in the population that already has taken 3 loans in the prior 6 months before taking this loan, that percentage has gone up from 22% to 59% within the 50,000 loans. And then in this segment, the delinquency has increased expectedly. Okay. Likewise, where there are many inquiries in the latest 3 months. And then thirdly, where there is a buildup in the balance in the last 2 years, coupled with these parameters. And lastly, where there is already a BNPL loan existing. So these are very small number of customers within the overall India scheme of things in terms of value. Yes. But I think what they're doing now is trying to catch these trends very early, okay, so that, like Shantiji said, as long as we can monitor and ensure that there is no concentration risk, study leverage ratios carefully, watch young vintages very carefully, so that we learn where these issues emerge and shut the tap quickly, or manage those portfolios better.
Okay.
Then this growth trajectory can keep continuing for us.
Well, Shanti has to leave in a hurry, so, very quick question to you before I go to the gentleman. Shanti, I spoke to a bunch of past and present regulators in preparation for this discussion. And I'll tell you where their worry is. See, gold loans were given only by a couple of NBFCs. Now a whole bunch of banks, public sector and private sector, have started doing that, and the rates have fallen very sharply. Likewise, personal loans. Some banks and some NBFCs were lending a little. Now with NBFCs plus fintech, that has gone through the roof. That's what's worrying them. Too much is being done, and whenever there is exuberance, they worry. Would you say that this could lead to bad loans at some places, not in all institutions?
So, Lata, two things. I repeat, whenever there is very sharp growth, regulators have to look at it, and there has been a sharp growth if you look across NBFCs, banks, including banks lending to NBFCs. I think what is important is really the underwriting philosophy at each of the various locations. It is possible. See, there is no standardized underwriting philosophy across any even two institutions. Data availability, models, algorithms, as Rajesh rightly said, are used by all the players in different ways. So what we have to watch is, is there sufficient sophistication? Is the pricing appropriate? I think you raised a very relevant point. This is risk-adjusted return. If you start pricing this wrongly, it can go, the other way. So I would watch to see, how it goes, because it really depends on how people are underwriting, how people are monitoring, and how people are pricing. Okay. Having said that, if the economy remains in growth phase and stable, if consumption, which is the theme which is driving the economy, remains stable, and credit being available at the point of consumption, this is likely to grow. But I would watch carefully and monitor it and make sure collection efficiencies are indeed correct along with pricing.
Okay, fair point. Shanti, thank you very much. My day job is as a macro data journalist, and you still make me sound relevant. Thank you very much for that. Thank you for joining us as well. Kartik, I want to put the same question to you. Gold is a collateral even for agri loans. Gold loans per se are rising. Gold is a collateral even for SME loans. Now, do you think over there we could be seeing incipient risk signs?
There is a possibility. What's happening is gold loans over the last 12 to 18 months, we've seen banks become very aggressive on gold loans. Again, it's largely linked towards the agri-related gold loan portfolio. Lending rates are much lower. So to that extent, one has to be a bit mindful of how that portfolio really plays out. At this point in time, the overall numbers are still comfortable. We're not seeing too much of a concern. But if that exuberance continues for a longer period, that there could be periods where we see a volatility in the asset quality for this segment as well.
Okay, so maybe that's why the regulator and CIBIL are merely raising the red flags. Winding comments from you, Rajesh, since we are primarily discussing your press release. What would you say? It is just an initial warning, but we are still going to see a fairly strong performance from banks and NBFCs?
Oh, I'm very sure, Lata. I think one point, we've spoken about the lender's perspective. We also have to keep in mind what the customers want. We have a large young demographic. We speak about them all the time. Now, I think one important point to note is that this population is not exactly looking to take a home loan very early or buy homes like perhaps my generation did. So while we talk about a consumption-led growth economy, this precisely is that consumption. So to that extent, I think it's a whole shift in mindset. There's no point getting negative about it, but it's important to understand these trends well and lend prudently and responsibly, so that we also take care of, we also cater to the customers' needs in the end, which is this large young population.
Okay. Well, absolutely well said. The demographic shift is also introducing some changes in the category of loans that are running faster than others. Kartik, Rajesh and Shanti, thank you very much indeed for joining me. I think the key takeaway for me from this is that there are probably small, incipient signs in some small category loans, and the regulator is merely cautioning. We still probably have a good run of both the economy and the banking and financial sector, but it is good to be aware that there are these incipient small signs of trouble in small ticket loans. We wrap up on this very special edition of Indianomics. Thanks for watching.